Hey guys, what's up? Welcome back to another video. In this video, I'm going to be looking into a stock that I found in the market recently that could be presenting a really good buying opportunity, and that stock is Owens Corning. And we can see this stock is up around 2% over the last year, while the rest of the market is down 16%, so they are outperforming the market. And so I'm just going to look into their financial statements to figure out what the earnings growth has looked like year over year, and it's actually been pretty impressive. And then I'm also going to figure out the intrinsic value per share for this company to know if this is a good price to buy into the company from a value investing perspective. And so before we get into that, right here I found a news article in Yahoo Finance pointing out the fact that they've returned a pretty decent return to their shareholders, beating out the rest of the market. They've had around a 40% return over the last 3 years. It comes out right here, they point out shareholders have seen a share price of around 34% over the last 3 years, well in excess of the market return, 25% not including the dividends they're paying to shareholders. And then on top of that, we can see in this paragraph right here, they point out that earnings per share growth for Owens Corning has been 46% per year over the last 3 years. And so that's also contributed to setting the share price higher. So they do have strong stock performance and strong underlying financial health. And so right here we can see another article. They point out some reasons why they believe that Owens Corning might be a good investment. In particular, they point out that Owens Corning does a really good job returning value back to shareholders through cash dividends and share repurchases, as well as capital expenditures in property, plant, and equipment. And then also we can see right here that they point out they believe that after doing a very conservative discounted cash flow analysis, that the fair value for Owens Corning stock could be around $95 per share and around $152 per share with mildly optimistic assumptions. And so considering the fact that their stock is currently trading at around $87 per share, whether or not it were to increase to a fair value of $95 or $152 per share, it would mean that it was going to provide a pretty good return for shareholders who bought into the stock at the current share price. But I'm going to do my own discounted cash flow analysis at the end of this video to figure out what the projected fair value could be based on some growth rates that I found. And so right here we can see this is their income statement comparing their results for the third quarter of 2022 to 2021. And during that time period, net sales are up from $2.2 billion to $2.5 billion. So that's an increase of around 14% year over year. And we can also see their net earnings attributable to Owens Corning come out to be around $260 million in 2021 and then $470 million in 2022 for the third quarter. So that's an increase of around 80% for their bottom line net income. So not too shabby of earnings growth for Owens Corning here. Then on page 6, we can see this is their balance sheet comparing September 30th, 2022 to the financial position for December 31st. And during that time period, total assets have increased from around $10 billion to around $10.7 billion. And we can see most of their business is financed by liabilities as opposed to equity, but they have had increasing accumulated earnings or retained earnings of around $2.7 billion to $3.7 billion. So that is obviously indicative of positive operating earnings in their operating history. And as a result, they have more retained earnings to then redistribute to shareholders or reinvest into the company. And so lastly right here, I want to go to page 9. This is their cash flow statement comparing the first 9 months of 2022 to 2021. And during that time period, operating cash flow has actually decreased from $1.1 billion to $1 billion, mainly as a result of what we can see right here, just gains on equity investments that they're not including in 2022, as well as an increase in or a change in operating assets and liabilities. And then also in their financial statements here, or in their financing activities, we can see the dividends paid and the purchases of treasury stock. They paid out around $103 million worth of dividends in the first 9 months. And of that $103 million, around $33 million of that came in the third quarter. They also purchased around $536 million worth of treasury stock in the first 9 months. And they repurchased around $206 million worth of common stock in the third quarter of 2022. And actually for their dividend, the board of directors increased to the quarterly cash dividend to 35 cents per share, which is up around 35% year over year. So a ton of value returned to shareholders of Owens Corning here. So that's definitely a good sign for people who have been invested in this company over the last year or so. Now I want to look at this discounted cash flow analysis to figure out the intrinsic value per share for the company. Yahoo Finance is estimating that this company is going to grow at around 7.4% for the next 5 years compounded annually. So I cut that value in half to 3% for the next 5 years after that. They had a little over $1 billion worth of free cash flow in 2021, around $2.4 billion of debt, and 93 million shares outstanding. And so that puts their intrinsic value per share at around $133 per share, with a 50% margin of safety of $66 per share, which means that at the current share price, they're currently trading at a little under a 30% margin of safety to a 50% margin of safety, somewhere in between there, based on these projected growth rates of 3 to 7% over the next decade or so. So that would mean that at the current share price, if they are able to maintain those growth rates in their cash flow estimates, that at the current share price, they present a pretty strong buying opportunity, trading almost at 50% of their intrinsic value per share. Also on the right hand side here, I did a competitor analysis comparing them to some of their competitors: Dow, PPG Industries, Vulcan Materials Company, and Masco Corporation. And we can see in comparison, it looks like Owens Corning actually has about middling of the pack a gross profit margin of around 26%. PPG has the highest gross profit margin. And they also have the second best net profit margin behind Vulcan Materials Company. They have the best return on assets, the second lowest PE ratio, which obviously could be interpreted as a good thing or a bad thing. A good thing meaning that they aren't trading at that expensive of a share price compared to their earnings, but it could be a bad thing because it might show that there's negative sentiment surrounding the future growth potential of the stock. But then lastly, we can see right here in dividends per share, they're paying out around a $1.13 dividend per share for 2021. And then compared to their competitors, Dow had the highest dividend, or PPG and Dow had the highest dividend, and then around Vulcan and Masco and Owens Corning, they all had around the same dividend of around $1 per share. So from a competitor analytical standpoint, it looks like Owens Corning is pretty competitive. They have a near top net profit margin and return on assets and PE ratio, but then they're lagging behind a little bit in gross profit margin and dividends per share. So they do seem pretty competitive. And then from an intrinsic value standpoint, they're obviously trading at about a 30 to 50% margin of safety based on these growth rates. So I'm not too sure what to think of this company at the moment. They have been showing some pretty positive earnings growth of 80% year over year, and they are beating the market over the last year in terms of stock market return. Let me know in the comment section down below what you guys think of Owens Corning. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.